Alright, greetings once again, fellow traders. This is Robinhood, and today is the 7th day of January 2019. And my goal today is to talk with you about the importance of trading small. I'd like to talk with you about bullet theory, scaling in, scaling out. One of the greatest needs in the Forex market, which is patience, because the market can stay irrational for a very long time, and you need to have patience for things to come back to reality. I'd also like to chat with you about larger time frames, some key fibs that you might not have but you probably need, and then also critical wicks. Now, if you noticed the other day, the yens did what they call a flash crash. All that is a fancy term saying that they crashed, and they crashed in a flash. It was really, really quick. Okay, so I'm showing you right now on screen, I have a 1-hour chart up of the US dollar Japan. And this move right here was several hundred pips, and it all happened in about 5 or 10 minutes of time. It was very, very quick. And this move was exacerbated across everything else. I mean, it was pound Japan, New Zealand yen, AUD yen, CAD yen, Swiss yen, Euro Japan, and it all happened very quickly in a low liquidity period of time. Europe was closed, New York was closed, and Tokyo was also closed, and Japan was on a bank holiday. So this happened at 6 o'clock in the evening, and really there was nothing open. I mean, there was no liquidity, and the market makers, they cleaned house. It was a brutal move, and the retracement has been equally quite brutal. So I'd like to show you some of the charts, and we can start off looking at this. Now, if you remember, going way back here, from this move in 2016 to this giant pop over here, everything retraced really slow. And eventually, it broke some of these very critical wicks. This one right here, and that one right there. And this move that collapsed just underneath that 200 MA probably got a lot of people thinking very bearishly. But notice that going under that monthly 200 MA, it only lasted for a little while. It was a very short period of time. And if you draw your fib in from here to here, this was a move just below the 618 fib level, and it dove down. But we reached a critical area of demand. This is where the original, you can see these critical wicks right here. This by the critical wick, I mean wicks that are very important in what they're saying about the market. You see this first one right here. Traders are basically saying, hell no, we won't go. I mean, that's it, in a nutshell. They're saying, no stinking way, this is too oversold, can't handle it, we're going to step up to the plate and start buying. Again, you have another critical wick right there, another one right after it, and it formed a monthly piercing bar. Now that monthly piercing bar had one more bar of follow-through with a smaller wick, and then you finally got your monthly buy. Now after that monthly buy, there was one more violent, brutal drawdown into the daily support, and then a gigantic critical wick where prices just shot up for a couple of months. So right here I look at this as very good demand area, and I look at this also as a very good demand area because prices just did not last. Now if you zoom out a little bit, you can see I put my fib from this bottom to this top, and we pulled into what I like to call the magic fib box. It's a 786 fib and an 886 fib, a reversal area. We also had a 200 MA directly underneath, and we had a lot of demand over here. You would see, if you look into the lower time frames, you'll see that this was the weekly, right here, weekly support, and daily. I just have to zoom out a little more so you can see it. This is this daily support area where we set up a left shoulder and a head and a right shoulder, and right in here was a neckline, and we busted higher. Okay, so that's one thing. I think it's very important for people to pay attention to the larger time frames, to pay attention to the fibs. But even more important than that is to trade small. Now, every time I've ever traded too big, I have deeply, deeply regretted it in my life. Okay, I can remember trading too big probably 5 or 6 years ago. I had a particular hedge fund guy that was breathing down my neck and saying to me, trade big, go big or go home. That was his strategy. And he really wanted me to up my size to, 10, 20, 50 standards, whatever. And it just didn't work out well. It, really, really hurt me and really caught me. It was beyond my comfort zone, and it was extremely difficult. He pressed me probably, 5 or 10 times a day for a couple of months, and I really tried not to relent. But at one point I did relent, and then I regretted it ever since. It was just a terrible thing. I can show you one other time that I did regret, and that was a few years ago. Just for fun, just for kicks and giggles, I had started a trade room. I had about 44 traders with me at the time, and I went extremely undercapitalized, and I didn't really realize that at the time. I thought I was doing a good thing. To pick something so small and to say, okay, well, here, let's turn $1,000 into $1 million over the course of, a couple of years. And I was going to show everybody how to do it, but, with $1,000, you cannot wash a micro lot, okay? I remember I made something like 12,200 pips in about a month and a few extra days. This is spread across like every conceivable pair out there, so it may sound really great, but remember, we were also trading MXN, ZAR, various things like that, so it's not the same as trading the euro. It was a little more than a month and a couple of days. I turned that $1,000 into I think it was 2,200, I seem to remember, but over here, now please notice this is the pound dollar and we're on a weekly. But over here, it flash crashed one night, Thursday, 7 p.m., New York time. No news at all. And it crashed 1,000 points. And I was long a whole bunch of pound dollar. I forget what I had. Maybe it was 0.15, maybe it was 0.20. Can't really remember. At the same time, I was also short euro pound, and you can just imagine if you go look at your chart, you'll see what happened to euro pound. It shot up like crazy. So obviously, I can't handle 0.35 or 0.40 on a $1,000 account. There was no way. Even though I had turned it to 2,200, it just couldn't handle that amount of size. Okay, so I made a tragic error, and poof, my account was gone. It was that fast. So if you trade too big per bullet, you really do stand a chance of getting cremated. And nobody likes that word. It's an unfortunate word. I don't like that word. And nobody really wants to get cremated. So let me just say right off the bat that I believe, it's my humble opinion, that the year 2019 is going to be ridiculously volatile, that you're going to see possibly even another black swan. Black swans only come around about once every 1 to 2 years, and they can be violent. Brexit was a black swan event. Everybody thought it would not happen, and then the very night that I finally realized it was going to happen, I shorted the living blazes out of the German DAX. I went like I don't know if it was 1.4 or 1.6 standards, and I woke up in the morning and I saw it was down 1,000 points, and I just went click and took all my profits and ran. It was like $28,000 in like one heartbeat. It was amazing. I doubled my account overnight. It was great. But you don't normally get a chance like that. Okay, these black swans, if you're on the wrong side, they'll kill you. You might remember the Swiss National Bank pulled a black swan on us a few years ago. And what they did, this would be about, 5 years back, I think. They pulled the plug. And, it was insane. I was long, I think it was a quarter lot of Swiss yen I had purchased, only a quarter. And I bid another quarter lot at the 886 fib. So I only got one quarter lot at the 786 fib. I bid for another quarter lot at the 886 fib at the time. And I didn't get filled. And I woke up in the morning and I saw it. It was up 1,200 points. That was one of the fastest, largest trades. Click, I am out. It was gone, you know. But if you're on the wrong side, you got killed, is my point. On the wrong side of a black swan event, you suffer terribly, okay? And it is my opinion that 2019, we are going to see very volatile market crashes, and it's going to hurt people a lot. So I can't possibly recommend to you any more than I'm trying to do right now. Trade small. If you have an account that has 400 to 1 or 200 to 1, or some accounts they even have 500 to 1, you should be okay as long as you trade just one micro lot per every $1,000 of account equity. And if you're in a USA account and you're trading at $1,000, a micro lot per every 1,000 of account equity, you're at 50 to 1. You're going to get screwed. Okay, pardon my French, it's going to hurt you bad. So you better up your account. You better put in 10 times the amount of money. Yes, you heard that right. 10 times the amount of money. So if you're going to be in a foreign account, you need like 5 grand or maybe 10. And if you're going to be in a USA account, you're going to need 50K or 100K. Sorry, it's the way it is. It really is. It's the way it is. In order to protect yourself, you need it. All right. So we see what happened here on the U.S. Japan, and if you look at the euro yen, we got the very same thing right here. This was a monthly place where we popped violently. There was a pullback, and it became monthly support. And here we are, trending down for a couple of months now. It broke underneath this one, broke underneath that one, flew below the fib level, started to approach the 618 level, and if you look right over here, this is your demand area where the original monthly buy was formed. So if on this day, when the flash crash happened, if you were going to go long on the euro yen when you saw this, where would you put your disaster stop loss to protect yourself? It seems like way down here is where you don't ever want the market to go. That would have been the right place. Weekly, you see the same thing. Daily, we can see it retracing powerfully now. Anybody who is shorting right now is getting creamed. Notice how the market is working. You have this original 1 hour buy with some follow through. Traders are scared, of course, so they're panicking, they're freaking. And here we have about 4 hours downdraft to come into this original bar, about 5 hours actually. Then up again, a few hours to retrace to what is becoming hourly support right here. See, we pop. We're getting these movements down into, fresh, new hourly support, right? We're making this series of higher lows. I mean, there's a low, but it's higher. Okay, there's a low, but it's higher. Here's a low, but it is still higher. There's one. It just keeps going. So anybody who is shorting right now, the euro yen, the pound yen, the New Zealand yen, odd yen, Swiss yen, CAD yen, US dollar Japan, doesn't matter. You got 7 yens to choose from, 7 yens that matter. They are being destroyed. Anybody who's shorting it is getting killed. They're trying to pick a top. They're not getting it. Keeps coming back. Keeps hurting them. But what I'm looking at, based upon the hourly time frames, if you see here you have 5 hours down, 2 or 3 hours down, right? This one is about 4. This one is greater than 6, but it didn't really go very far. Here you have 4 hours down, but again, it did not go very far. I do believe that at some point we're going to stall out. Now it does seem that the market is trying to reach for the 200 MA right, on the hourly chart. It seems like the market's trying very hard to press for that. Stochastics are extremely high. I believe that everybody's being lulled to sleep by this price action. They see what it's done and they think that it's going to do it again. And they're being lulled to sleep, in my humble opinion. What I think will happen is that we stand a very good chance to come down for a couple of hours where people will start to buy again, because former price action does tend to indicate what the future price action would be. That's at least what people are thinking. But it's my opinion that we're going to come down for a couple of hours to hourly support level, and then we may stall for a brief moment and possibly set up an hourly buy and maybe start to go higher, and then the market will just pull a little sneaky thing and end up crashing even lower, possibly here, possibly even this far, taking out that low. That would terrorize people. You see, it would scare them half to death, because they would be reloading long, doubling up on the reload long, and then all of a sudden they'd feel like, uh-oh, I'm wrong, I've caught it wrong, and they would want to bail out of every long that they took, and they'd want to get short again, trying to predict lower lows to come, like down here and down here. And I don't think that's going to happen. It's my humble opinion we're going to get a really good downdraft, shake somebody, shake them, and then continue to go higher and just absolutely move up for many, many days, many days in a row. I believe, it's my opinion that that is going to occur. Look here at the pound Japan. You can see the very same issue. We did break the 618. We attempted to come to the 786 fib, but just because you break the 618 level, it doesn't mean that you absolutely have to go to the 786 fib. It's not like it's like some kind of a necessity to happen. Okay, it didn't, and it doesn't always go there. We just entered a very good original place where a monthly buy had occurred. All right, we have critical wicks here and here. And I think it was quite enough that the market makers broke that on that day. Just a few days ago, they broke it swift, violently, 500 pips straight down, and that's irrational. Okay, and I don't think that it should last. And I mean, everybody in my trade room kept asking me every, 15 minutes, every half hour, somebody would say something and say, Mike, what do you think now? And they would always, rephrase it in a slightly different manner, but it was all the same question. And the question is, do you think we're done? And I kept saying to people, yes, I really believe you have seen the bottom. I must have said that for, 3 or 4 hours until it was so late I had to go to bed. Couldn't stay up past 10 or 11 o'clock. I got to sleep sometime. But I did say to everyone, I really think that you have seen the bottom, and that all pullbacks should be bought, and a stop loss set at the absolute bottom, and just relax. It's all gonna come back. And you look now and you see the tail right there, and you see the daily buy, and we're getting another buy. So it just seems like the market has it in, that it really, it's recovered the whole thing, by the way. Every ounce of this is recovered. And it seems like we're trying to push higher and higher. And I believe that's the way it's going to work. Looking at the hourly, there's your move right there. That's the bar in question. See, we've recovered it, and a lot more, and a lot higher. So I think there will be pullbacks still, and this throws a monkey wrench into the equation for sure. I mean, people are scared, okay? And after a gang comes along, a gang of violent thugs, 5, 6, 7 hoodlums with, brass knuckles and baseball bats, and they've got their little batons and their knives, and they jump on you and just start kicking you while you're down, beating the tar out of you. I mean, once they see that you're done for, and they walk away, you don't just jump up, start walking 5 minutes later. I mean, my God, you got to lay there in a bloody mess, a pool of blood on the ground for, a couple of hours and try and regain your sense of composure, and your body has to heal a little bit. Your brain's got to recover. Your ribs have been cracked in, so you're having some trouble breathing. I mean, it takes time. You don't just get up and take off running, So I look at this and say, okay, this has had its teeth kicked in very badly. I can see how many hours it took for it to finally get up and start walking to the hospital. And, I think one more trip and stumble and fall is going to occur. I don't quite quite know how low we're going to go, but then I see nothing but upwards. Okay, it's just my humble opinion. Now, take a look here at the Swissy yen, and look at the critical wick that happened previous month. Okay, we pulled into this 618 fib level. This all happened in one night in 10 minutes. We broke that low, thereby stopping out anybody who was long, right? Fell into a decent support. 618 fib is where a lot of traders will tend to look. It's just a self-fulfilling prophecy, right? You can see the bounce has been incredible. It's done the very same thing that every other yen has done. The moving averages are crossed over. They're separated wide like railroad tracks. You can drive your car right down the middle of this thing. And, we're trending higher. Look at CAD yen. Similar. See, so it's very similar. We broke 3, 4 really good critical wicks that you can see here. These are 3 of them. And there's your 4th. We broke that, slammed into the 786 fib, but here again is our original monthly buy bar. Right? New Zealand yen. See the wick? See it again here? All of these wicks are basically traders saying, hell no, we won't go. Prices are too low, we can't stand it. And they're jumping into this and trying to go long. Every wick, they're trying to shove it back up, right? Over here, 3 of them in a row. This is why it's very important to look at monthly charts and weekly charts. I think it's very important to put your fibs in. And if you're not using a 786 or an 886 fib, you probably should be. It's very important to pay attention to your stochastics, where they are. It's very important to pay attention to critical wicks, right? And to think, if you were to take this long, the New Zealand yen, on the day of the flash crash right there at the bottom, or even an hour later when we were up, let's say that high. That's about 1 hour later. Let me just check and make sure. Well, that's an hour later, and then you had 6 more hours to think about it, okay? So really, you had about 7 hours right there to think. If you even wanted it long, 7 hours is a pretty long time. Where would you, if you went long, where would you put your stop loss? Doesn't it just make sense that right about 30 pips underneath that bar should be it? You want to place your stop loss where you never ever want the market to go. So I think 1 unit of risk right there has already resulted in 2 units of reward to the upside. Okay, and I do again think on the 4-hour chart and the 1-hour chart that we should have one more high quality pullback, a very good one, before we turn around and start to trend higher. And I do believe that trend will last for days and days on end. Odd Japan is another one. I mean, you just have to think about it. The smart money that really wants to be long has had to wait for years and years and years to be able to get these prices. These prices don't come along, every day. I mean, my God, you have to wait forever to get a price like this. It just doesn't happen. Okay, this is the 2008 and 2009 low, the crisis that we had. And it was a very big crisis. I don't deny. I mean, I know the whole thing and what happened. It was terrible. I mean, we literally could have entered a global depression for 10 years or longer if the Fed did not step in and do something. They had to do something. So Lehman Brothers collapsed. They were thrown under the bus, but not everybody collapsed. I mean, the Fed, thank God, did step up and did what they had to do. And it was a good thing. Otherwise, you and me would know a very different world right now. But, let's forget this one. Okay, let's forget all the way back 10 years ago and just focus on these 2 wicks over here. All right, this is 2009. Look at that one. That's 2010. This is 2011. And here again, this looks like 2015 and 16, that low. You know how rare it is to get a dip this big? Smart money is waiting. They're waiting for this kind of stuff. And if you look weekly, you'll see the very same thing. We came super close to that. And if you were to go long on that night, I mean, where would your stop be? Your stop should be probably 50 pips under these lines, because you don't ever want to see those monthly lows blow out and go away. We came really, really close. It was very, very scary. I don't deny it. I don't deny it at all. It was terrifying. But if you go long, you know, you got to put your stop underneath this, so maybe 71.50, and look at the recovery. So we have, I think it was 500 pips. Was it 500 pips down? That happened super quickly, and here we are recovering from the 72.70s all the way up into 77, almost 77 70s. So you have, well, this was not 500 pips down. This was just a couple of hundred pips down, but you have 500 pip recovery over just a few days. And again, I believe what will occur is that we will come down, break this low, head for new ground, like over here, and then trend once again higher. So number one, now that we've seen 2 yen flash crashes, I don't think we're going to have another one anytime soon. Now, I could be wrong. There are certain potential things that could bring it to pass. One of those would be a war, right? With a war with China or Russia or both, Iran, whatever. I mean, if we go to war, another fresh, brand spanking new war, if somebody sinks one of our naval ships or something, or we sink one of theirs, I mean, the poopy, let's say the spaghetti is going to hit the fan, okay? It really will. You will see moves and you're just going to say, oh my God, did somebody drop a nuclear bomb on something? Because, it'll make this right here look like a hiccup. If we have a war, that'll look like nothing. So that is one thing that could happen. Going forward, like I said, in 2019, I think volatility is going to be very extreme. And I think we're going to have liquidity crises in the bond market, derivatives market, stock markets. There's going to be all kinds of, listen, the Dow going down, up, and down, 700 points, 1,000 points at a clip, up and down. That is not what you see in a healthy market. That is what you see in a bear market where people are scared to death. Right? And I think we're going to get a lot of that stuff in this year ahead. So I'm just highly recommending that you pay attention to the larger time frames, pay attention to your fibs, be a very patient person as much as you possibly can with regards to entry. And then again, even with regards to your exit, I hate to tell you, but you've got to mix with a lot of patience if you want the market to regain its sanity. Sometimes it can take 72 hours. I mean, sometimes it can take a week for the market to come back to normal. All right, so I wish you well. If you like the video, please give me a thumbs up. And if you want to subscribe, I do occasionally put out some good videos once in a while. This may not be my best, but I do put out some good ones once in a while. And if you want to follow me for trade recommendations or various things that I might happen to say during the day that I think are important, I'm on Twitter at Forex Assassins. Okay, that's Forex Assassins on Twitter. And I hope this video was helpful to you, and I wish you guys well. Remember, trade small, trade safe, breathe easy, and until next time, I'm Robin Hood signing out. Have a great trading week.